Congressman, I wanted to move on to an area regarding tax reform. There are a few questions. One is from Elizabeth Moose, Palm Beach Gardens. Can you comment on fair or flat tax?
That's a great question, and I think there's a lot of misconceptions out there. A flat tax means we just flatten it out, one basic tax rate, and you eliminate loopholes and subsidies when you talk about corporate business tax rate, or you have very few deductions when you talk about the personal income tax rate. And that's why I say with a flat tax, I think 13 to 16%, every wage earning household, that's what you will pay. 2 deductions, mortgage interest tax deduction, child tax credit. Then on the corporate business side, 21%, and then all you have no loopholes, you have no subsidies. Now when you're talking about a fair tax, a consumption-based tax, that's basically what we had before, and check me if I'm right, 1916, when we created the 16th Amendment, IRS, and all of that, was based upon what you consumed, what you went out and bought. Now that's fine to get to having a fair tax, but what you have to make sure of, if you're going to institute a fair tax, all levels of federal income taxation has to be gone. Because if you're not careful, then you get what is called a value-added tax. You have your basic federal tax, and then you have this fair tax based upon your consumption, and national sales taxes on top of that. So you got to get rid of capital gains tax, you got to get rid of dividends taxes, you got to get rid of the death tax, estate tax. You have to get rid of the IRS if you're going to have a fair tax. That means you have to repeal the 16th Amendment. So what I believe is that the fair tax can be an end state that we get to, but a flat tax can be a bridging mechanism, because remember, you have 47% of wage earning households that aren't paying any type of federal income taxation right now. What a shock to the system it would be if they all of a sudden went out and got hit with a 23% national sales tax on goods and services. Okay? So that's where we have a flat tax as a means by which we can slowly but surely, remember, incrementalism is not a bad thing, to get people accustomed to this, get more people into the tax base, and then we can start doing the things to move toward having a fair tax.
Lola Levine wants to go a little bit further and ask you, how about lowering the corporate tax rate to 20% with no loopholes? That could create an additional $100 billion.
And that's exactly what I say. I say 21%, because what I looked at is if we keep our states with a 4 to 6% corporate business tax rate, then states top out about 20. Any corporation tops out about 25, 26%. So I think 20 to 21% for a corporate business tax rate would be the right place to go. I've talked to some CEOs that gives them a competitive tax rate with the rest of the world. We can't lower it down to 12 or 13% like you have some places, but that 20 to 21% is competitive for them. And like I said, then there are no loopholes. There are no subsidies. We just give you a competitive tax rate.
Luigi Goldberg also wanted to know your opinion on the value-added tax. I don't know if you had that.
Value-added tax is what's killing Europe. It is not a good thing, because, like you said, you're just increasing the level of taxation on people. So, if you're going to have a fair tax, you've got to eliminate all other forms of federal income taxation so that it does not become a value-added tax, which at this time would crush American households.